Cummins is what we want to sort of shine the spotlight on once again. Vamakshi is here with exactly that. Vamakshi, over to you.
Well, Cummins will be in focus today. The parent company actually declared its numbers as well as held a con call, and in the conference call, they said that in India they're projecting total revenue, which includes several entities, including JVs, to rise by 1% in calendar year 24. And this, they said, will primarily be driven by strong power generation demand. In Q3, they also added that revenue in India, including JVs, saw a decline of almost 12%, but the power generation revenue in India grew by almost 49%, and this is largely being driven by two factors. The first one being pre-buy demand for stationary power out of the CBCP4 emission regulations, and the second one being increased demand from data centers. However, it is important to note that Cummins has 7 entities in India, including 3 JVs, out of which Cummins India is the only listed one, and therefore it is very difficult to draw a direct correlation to Cummins India's power generation business sales given presence of other group entities in India. But overall, when we talk about the commentary that came through, especially on the power gen front, that is quite positive for Cummins India. In fact, there's a note from HSBC as well. They have a buy rating target price of 4,200 on Cummins, and they say that the takeaways from the parent's Q3 results are positive for Cummins India. They're expecting 50% revenue growth off a low base for the company, especially in their largest segment, that is power gen, and this in turn would drive a 21% top line expansion in the second quarter, and overall they're most constructive on Cummins India amongst their coverage. So the parent's commentary boding well for Cummins India.
All right, Vamakshi, thank you very much for that.